Thank you very much for coming. My name is Darren Joseph, HEJ.tax. Our team is really about tax. We work with private clients and we help them demystify the sometimes confusing world of international taxation. We're part of a wider practice here in Asia called Moore's Roland. I'm actually here for Weber Partners meeting. We have it twice a year, and this time Mr. Carter's turn to host us. So I thought while I'm in town, I will set up some time and meet some of you guys. So thanks for coming out. What if someone is a US taxpayer, so they're US exposed, whether it be virtue of having a US passport or green card, but they're also Indonesian. So they reside in Indonesia. However they reside, that's irrelevant. So they're exposed to both tax systems. Generally speaking, the US is somewhat unique. I mean, this is nuanced. There are other countries, including Singapore, in which it can happen. But generally speaking, if it is that you are a US citizen, you are by virtue of being born or your parents or whatever, and that even includes what we call accidental Americans. Because by law, if one of your parents was a US citizen, then at the time that you were born, then you could be a US citizen, regardless of whether you have the passport or not. And we encounter that more often than you would imagine, right? So you're exposed to both. And you find yourself in Indonesia, what happens? Indonesia also taxes you on your worldwide income. So if you're here in Indonesia, you're faced with a bit of a situation where both jurisdictions want to tax you on your worldwide income. That's why it's really important to get a team to work with that understands both, because the risk, and this is what everyone asks, the risk is that you can be double taxed. You can be exposed to taxes in both, and nobody wants that. Essentially, the way we work with our clients who are dual exposed is that you are sitting in Indonesia. I mean, I don't know your situation, but generally speaking, the income arises from Indonesia, so it's Indonesian source income. So therefore, Indonesia has primary taxing rights. So Indonesia will tax it first. Indonesia will, depending on the nature of the income, Indonesia is a relatively high tax jurisdiction. So when you look at the US side, you get a credit for what you've already paid to Indonesia. So let's say you made $100 of 100 million rupiah or whatever. And Indonesia says, well, you made 100, well, give me 25. So that's your tax, right? And then the US says, well, your effective tax rate after all the deductions, because that's the thing with the US, you get lots of deductions and depending on what you're doing, right? So the US says, well, give me 20. Then you can say, well, hold on, I've already given 25 to Indonesia. So I'm going to file a form called an 1116, which I declare that Indonesia has already taxed me at 25. So I kind of don't need to pay you anything because I've already paid to Indonesia's tax office more than what you're asking for. So in fact, I'll get foreign tax credits to carry forward to offset against future income to the US. So that's essentially how it works. There's a system of foreign tax credits. But I know Indonesia has foreign tax credits as well, if it were the opposite. But to get foreign tax credits accepted in Indonesia is a headache. So, well, you see, you guys know what I'm talking about. In the US, it's way easier. In the US system, you sign a tax return under penalty of perjury. So you basically swear on your honor that you're doing the right thing. Now, they take a statistical random sample, or they look for red flags, and they do random audits. But for the vast majority of people, they just accept what you've said. So, oh, okay, you pay taxes in Indonesia, that's fine. We accept what you've said. So that's essentially how it works. In terms of running a business, if it is that you are running a company in Indonesia and you're exposed to the US tax system, again, you're taxing your worldwide income. And like Indonesia, because Indonesia has a system of asset declarations, right? You declare everything that you have here, well, they'll know, as well as you declare all your assets outside of Indonesia as well. The same applies to the US. So the US is saying, well, okay, you're working in Indonesia, you're running a company, or you have shares in a company, or you're involved in a partnership or joint venture, or whatever the nature of it. We want to know about it. We may not necessarily tax it, but you need to declare it. So you need to declare any income producing asset. So, for example, if you have shares in a mine or whatever the case may be, you need to declare that. Any company, any corporate structures, you need to declare that, as well as any bank accounts you may have in Indonesia need to be declared to the US. Again, it doesn't necessarily generate any tax liability. It's just that the US wants to know. So that's essentially how it works at a very high level.